The very good news is we are living longer than we ever have. But how do you know if your funds are going to last as long as you do? That's why we have to have a long-term care conversation. I'm here with financial advisor Mike Schessler of Sustainable Retirement Solutions. Mike, is there a time when you start talking and having conversations about long-term care?
Well, Spike, not to sound trite or anything, but earlier the better right away is better than too late. If you're waiting for a long-term care event to happen, or if you're waiting for a deterioration in your health to then determine what you're going to do about it, it's probably already too late. So we want to start early when it comes to long-term care. The biggest misnomer, though, many people have is, well, I'm going to need to get a long-term care policy. Long-term care policies are great. Believe me, they're great. But they're also out of reach for a lot of my clients in that, in my area. And so that doesn't leave them, without any way of handling these care issues that come up in the future. I talked about in the beginning with my house, you're building your retirement house, and after a while that house needs to be upgraded, right? The house needs to have some types of repairs.
You got to put the roof, sometimes you got to redo the driveway, everything from electrical, the windows.
Absolutely. And so our bodies are kind of the same thing, right? So if you can plan for that and prepare for that with strategies that maybe don't have to include long-term care premiums, which can be, as you know, quite expensive. I think nationwide might be about $100,000 a year. New Jersey, New York area where we are, it's even more. There's hybrid strategies out there that can really help with that planning and help using part of the nest egg, part of the money that you worked hard to build, and have that put towards care in the future.
Let me help break that down for your viewers here. So there's the good old-fashioned long-term care policies. And I believe that there's been a lot of increase in part because of the actuary tables. We're living longer. So people used to come to live events and say, hey, they sent me a notice, my premium, my monthly, they doubled it, they tripled it. Can they do that? And the answer was yes. And so people would just drop it. Yeah. Explain to me a little bit more about these hybrids. What exactly are they, if you don't mind?
Well, so think about, you might have heard index strategies, you might have heard of fixed index annuities and so on. These are ways of making the money that you worked hard to save for, and they might be even in your IRAs, it might be money in your 401ks. You can roll it into these index strategies that are specifically designed to help provide a benefit for care at future ages. And that could be as much as 2 or 3 times the amount of the benefit used for your long-term care in the future. So there's a lot of different ways that we can look at a lot of products, thankfully, that are out there on the market.
I mean, we insure automobiles, we insure our homes, and we know that catastrophic event, they might not pay for every stick of wood that goes into the house, but it's going to recover a lot of it. I think it's the same thing with this. There are statistics out there, though, that say that if a couple reaches the age of 65 together, I believe it's a Fidelity study, they say there's a 70 to 72% chance that one of you will need long-term care.
Yes.
That's a pretty high number to not be planning for it.
That is a very high number. And so there's lots of things that we can do to really have a kind of a contingency plan in place if that does happen. Because as I stated earlier, the last thing you want to do is wait till something does happen. And it doesn't take as much as you think. And that's, hopefully that gives some people peace of mind and some confidence to know that, well, all right, I don't have long-term care insurance and I'm, in trouble if something ever happens. It doesn't have to be that way. We can take your whole financial picture as a whole and really break down the segments of it. And we can oftentimes build care checks. I like to call checks care for your care in the future with that money that you've saved.
Yeah. And again, as a financial advisor, how much of this is part of the planning process? I don't know if this is necessarily first phone call and meeting, or is this maybe second or third, or do you kind of have like a certain age, say, hey, Bob, Susan, we've been trying to talk to you about that. We've got to start considering this.
I bring it up sooner rather than later. My first calls with clients are generally driven by them. I want to learn about you. I want to learn about my client, learn about what's important to them. Oftentimes they've come to one of my seminars. And what I do is I try to find out, even in the seminars, what are concerns of my clients before we even have that first call. But that's where we generate that first conversation. But I'll always bring up, have you given any thought to what the future may bring for you after the playtime is over a little bit. 'Cause we all want to have fun and playtime in our retirement. That's what, after all, that's what retirement should be all about. But there are times when sometimes the playtime is starting to wind down to an end, and now we have to worry about care time and caring for our health. Have you given any thought to that? So I'll always prompt my clients to start having that conversation.
Mike, thank you very much. Longevity planning might seem like it's new to you, but it's something that Mike Schessler here does every single day in his office. If you'd like to get started on your own strategy, you can schedule your own time right now down at the website, or you can call the phone number. Thanks for watching.